One of the best business in the world has fallen over 30% in price. It makes people wonder, is there a problem going on at Microsoft? Is their business still strong? Should I buy to dip? To help answer these questions, today we are gonna do a pros versus cons on Microsoft stock, ticker symbol MSFT. I'll present to you 6 major reasons I see to be a buyer, and 4 others that might make you want to be cautious. Just a quick reminder, this is not financial advice, I'm not a financial advisor. Now, moving on to the main topic of the video, 5 pros and cons for Microsoft stock. Let's begin with the pros, diversification. Microsoft is by far the most diverse company out of the big tech, meaning their revenue streams are spread out into several segments, such as cloud, Office, Windows, gaming, LinkedIn, search and much more. Their biggest segment alone is just over 30% of the company's total revenue. Just to compare, Apple's iPhone sales represent more than 50% of its total revenue. Google has almost 70% of revenues coming from advertising. Amazon's online store sales are 47% of its total revenue. And Meta, the least diverse of them all, has 97% of its revenues coming from advertising. Cloud. Azure has been the fastest growing business for Microsoft over the last decade, and that's not about to change. Last quarter alone it grew 40% when compared to the year before. For those who don't know, Azure is Microsoft's cloud main business. It has hundreds of tools that provide services like servers to online businesses that need to host a website or an app, as well as storaging for their constant flow of data. This service is a monthly subscription charged by usage. As the online businesses grow, their server costs, Azure, goes up. Their main competitor and market leader is AWS from Amazon. There are a few other companies in the space, like Google, Alibaba, IBM and other smaller ones, but they are not growing as fast and aren't really a threat at this point. It's a very complex and expensive business to build. As of today, all serious startups use either Azure or AWS. Also, if a company decides to switch from Azure to any other service, it takes an insane amount of effort, time, and money. And it's not like you can just turn it off or reduce during recessions, like companies do with labor and advertising, for example. The online businesses are 100% dependent on it, making it kind of recession-proof. SaaS King. Microsoft is considered by many as the SaaS King. SaaS means software as a service, the business model that every company is trying to use nowadays. You don't have to sell every time to get money from the same customer. Revenues come nice and easy every month, predictable, with low churn on customers, and high margins. Netflix is the perfect example of this business model. Hundreds of millions of people now pay a few bucks every month to watch unlimited movies and series. Apple, that historically makes money by selling devices, is now mainly focused on increasing its service businesses. Even traditional companies like Costco owes part of their success due to their subscription service, something that put them apart from others in the same industry. Great margins. Software companies usually have high operating margins. And Microsoft not only has it, but it's increasing it year over year, jumping from 19% in 2015 to an outstanding 41% in 2021. This increase is mainly due to Azure and LinkedIn. They both got great margins and have been growing on a faster pace than the rest of the company's businesses. Healthy balance sheet. As most big tech, Microsoft has an amazing balance sheet. A $49 million debt for them is very low when you consider they are generating $89 million per year on cash from operations. They also have a huge cash and cash equivalents position of about $105 million. This puts them in a very good position, constantly making acquisitions, paying dividends and buying back shares. Last quarter alone Microsoft profited $16.7 billion, paid $4.6 billion in dividends and bought back $7.8 billion of shares. Another highlight here is the reason for such a high cash position. They are in the middle of a $69 billion Activision Blizzard acquisition, so if the deal goes through, the cash is there, no debt needs to be raised. Opportunities ahead. Microsoft has several great opportunities ahead to keep growing and increasing value to shareholders. The Activision Blizzard acquisition will be a great addition to their gaming franchise. Together with Xbox and the Netflix for gaming strategy, there is a high probability Microsoft takes the absolute lead on gaming in general. Another clear opportunity is the constant growth in Azure. As explained earlier in the video, the cloud business is incredible. In my opinion, it is the best business to be right now, and I just don't see it changing anytime soon. Microsoft is always developing something to enter new markets, and the metaverse is probably one they won't be left out. In terms of device, they already have one in the market, Microsoft Hololens. It is different from Meta Quest, or Oculus. It's a device focused on business rather than personal experiences. Okay, let's move to the cons of Microsoft stock. Before we begin this part, I just wanna say, it was pretty hard coming out with cons for this company. There aren't too many, and even the ones that are, they are not that bad. Having said that, let's dive into the cons. High valuation. First issue here with Microsoft is the 25 PE ratio. That is a bit high considering both market average and its own historic metrics. So, I believe this shows that is definitely not a cheap stock at the moment. It's not a screaming buy. But, keep in mind that due to all the pros listed earlier in the video, like the increase in margins for example, a higher PE nowadays could be justifiable. Also, big quality companies don't fall as often, and as much as smaller riskier companies, drops of over 50 or 60% here are very rare, a once-in-a-decade event, if that actually happens. It's already a huge company. Another concern for Microsoft is their size. For a company to justify a price of 20 times earnings or more, it better grow double digits for the following years, which gets more difficult every year, as the base for comparison increases a long time. Take Windows and Microsoft Office for example. These businesses have kind of reached its total addressable market, so the growth year over year is basically an increase in prices to keep up with inflation. To keep growing double digits, they often have to find a new massive niche and dominate. So far they do have the cloud doing this job, and will probably keep doing well in the following years as previously mentioned. But, it's always a risk. Once this side of business starts slowing, if they don't find another golden egg chicken, its PE and consequently the price will probably follow. Antitrust issues. As most big tech companies, Microsoft has troubles to acquire other relevant businesses. For a company that generates so much cash and needs to expand its business segments in order to keep growing, purchasing smaller but established companies is usually a good path. Currently Microsoft is trying to close a deal to buy Activision Blizzard and is facing serious antitrust scrutinies from governments all over the world, as well as entering in a gaming war with Sony. Big overseas exposure. As Microsoft is extremely global, it has a significant amount revenues coming from outside United States, where the currencies have been getting weaker in relation to the dollar on the past few months. Also, they reduced operations in Russia due to the war in Ukraine. And to make things worse, the advertising business on LinkedIn and search suffered from the headwinds happening on the advertising market, due to supply chain shortages and the war in Ukraine. All these factors made Microsoft miss expectations last quarter. The not so bad news here is that all these situations will probably turn around and finally become transitory, like Uncle Paul used to say. That's it for today folks. Hope the video was helpful. Let me know in the comments if you have additional pros and cons, and if you agree or not with the ones I came out with. Don't forget to like and subscribe. Be safe out there, and I'll see you in the next one.